Let's turn to energy and look a little deeper. The S&P 500 energy sector is one of the worst performers so far this year, but the chart master sees the tide turning for commodities and the broader space. So let's bring in Carter Braxton Worth of Worth Charting.
Courtney, thanks. There's so many things to consider, obviously, when trying to determine if a real laggard is finally an opportunity. But before we look at the charts, the really curious thing is it even a sector? We know that the entire S&P 500 sector is 4.2% of the S&P, and three stocks are half the weight of that 4%, right? Exxon, Chevron, and Schlumberger. So, talk of a sector independent of all the jobs that it is responsible for, it is a very small part of the market. Nonetheless, I think there's an opportunity, and let's try to figure it out together. The first of four charts, this is a ratio chart. We're simply looking at a line that depicts the relative performance of the S&P 500 energy sector to the S&P 500. And we know, of course, that you have that massive rally coming off of the COVID low, and energy outperforms for 2 years. But where does that outperformance stop? It fails to the penny at that downtrend line, which you can see annotated there. Now, if we look at this same chart with a second set of lines, you'll see that the sell-off leaves us essentially this give back of the past 8 months at the 1999-2000 relative low, which is to say, with the exception of COVID, when there were no cars driving, no planes moving, nothing was happening, we are now at an all-time relative low, not seen since the dot-com peak, 99-2000. And I think ultimately you get a bounce here, hence the arrow that you see. Now, as to the sector itself, absolute. So this is the XLE, or the sector itself, and it is an uptrend line. That part is incontestable, and we know that it indeed has bounced to the penny off that trend line repeatedly, over and over and over. Final chart, same chart, but just putting in the downtrend line, the intermediate downtrend line in effect over the past 6 months. We have converging trend lines here. We are into the apex. The question is, make your bets. Are we going to break down or move up and out? I'm in the latter camp. I think one wants to be overweight energy.
Carter, what's your timeline on this trade?
Now.
So you'd be overweight right now, and for how?
So if which is to say, when you buy something, you think it's going to happen now. Does it have to happen today or tomorrow? But if I thought it was 3 months from now, I guess I'd hold off. But the idea is now, and we shall see.
All right. Thanks, Carter. Well, you might have been right today and had a pretty strong day here today. Thank you very much. Guy, what are your thoughts on this trade?
Yeah, I agree with him. We talked about OIH briefly, but I'll say, that's that stealth rally that we talked about from 248 or so in the OIH to 310, I think today-ish over the last month and a half or so. I think that's caught a lot of people off guard. I think it continues because you can make a very reasonable cogent case on valuation for all the components of it, specifically Halliburton and Schlumberger. So in the earnings, I think you stay with it. And I'm not trying to get on any analysts out there, but I think Wolf on July 10th downgraded ExxonMobil to peer perform, which is fine. I think it was the exact wrong time because I think Exxon in earnings, who had a great quarter last quarter, is probably going to rally in earnings this quarter.
Yeah, it looks like Exxon actually was the leader today in the group.
What's interesting about what Carter said also, he reminded us that the S&P energy is 4.2% or 3% of the S&P. I've been saying for a long time I think that's going higher. So far it hasn't. But when I get back to Schlumberger, guys talking about oil services, Schlumberger is they've beat or hit for the last 17 quarters. They have a balance sheet that's as good as it's ever been. They have offshore oil demand. We're actually seeing significant drilling demand in some of these far-flung places that at least at times during bull markets in the energy space, you've actually seen oil services names rally. So I've been long this name for a long time. I feel really good about the consistency of the earnings profile and the margin profile. It's one of the few places where margins, I think, are improving. Some of their costs are actually coming down, and I think you can own it. It has moved, as Guy said. It's been a 25% move in Schlumberger from June 1. So pick your spots here, and maybe it's even some a more conservative guide in the earnings number. But I think you want to stay long.
Courtney, what do you think when you look at this? Do you think you have to be careful when you're choosing these names, as we're kind of uncertain about what's going to happen in the economy when you're looking at a broader fundamental analysis for this group?
Well, and I think that's why this group has been lower than I think their valuations and the supply and demand constraints really justify they should be, is because everybody's expecting this recession to happen that hasn't happened, and people are expecting demand to fall off a cliff that hasn't happened. At a certain point in time, you're going to find people rotating back into this. And so I love everything Carter had to say. I think Tim brought up some really great points here, but I think you want to be in energy right now.